Thought an ant was crawling on my wrist. Anyways, I feel his pain. It's frustrating. Like his surrender charges were $300 over what the bonus would actually give him. You have to. Otherwise, if you're not made whole, the insurance company won't take you. Hey there, my name is John Stevenson. Welcome to the show. Today we're going to be talking about a client of mine who tried to replace 3 of their annuity policies and weren't able to. So he reached out to me actually about a year ago and he wanted to submit some annuity contracts and we couldn't do it just because the surrender charges were too high. So we waited a full year hoping that the surrender charges would get down low enough where he could actually purchase an annuity contract. But unfortunately, he was still like $300 over, like his surrender charges were $300 over what the bonus would actually give him. That was disappointing. So he wanted to just surrender his policies anyways.
He's like, you know what, I'll just surrender them anyways, and then I'll take the surrendered funds, and then I'll buy something.
And I'm like, you can't do that. I'm like, it's coming from a surrendered policy, and because it's coming from a surrendered policy, they won't let you do it. That's just how it goes. And so it's frustrating because I know he wants this annuity. The rates are really high right now. He can lock in a ton of lifetime income. In fact, he can double the income right now that he can get versus his other policies, and he's trying to do it before rates change. And so anyways, I feel his pain. It's frustrating, super frustrating, especially since he's so close. If he waits one more year, I have no doubt he'll be fine. The surrender charges will be low enough and the 10% bonus will be fine. Bonuses are really, really important. When you're looking to replace annuities, you got to get a bonus that covers the surrender charges. You have to. Otherwise, if you're not made whole, the insurance company won't take you. So it can be very frustrating for a lot of people when they're put into these contracts that weren't so good, they shouldn't have been put in, and then they can't get out. Okay, and that's just how the regulations are. The regulations are that if you replace the policy, it's got to be best for the client. You got to make sure that they're getting a lot more income, and you got to make sure that that they have a bonus to make them whole. Thought an ant was crawling on my wrist. There's a lot of bugs out here at Lake Tahoe. There's a lot of water, and so a lot of bugs. Right? Makes sense. It's a nice day though. It's a little breezy, but it's not bad. This place usually when it's calm, it's like you can see all the bluish and the greenish tints all the way through there. But not today when the waves are rolling. It's still pretty, absolutely gorgeous. I mean you can't complain. Look at that view. You can't beat that view. You really can't beat that view. I guess the moral of the story is if you're looking for an annuity to replace your current annuity and you got surrender charges, you need to make sure that your surrender charges, I would say rule of thumb, make sure your surrender value is high enough where you can get out. And what I mean by that is you're going to take your surrender value and just basically look at that versus your accumulation value and make sure that the 10% premium bonus that you'll get, which a lot of these are 10% premium bonuses, make sure that it completely brings your accumulation value back up to where it is or higher. If it does, you're good to go. Just take your surrender value, multiply it by 10%, and as long as that ending number is at or above your current accumulation value, you will be able to replace that policy. Now, you shouldn't just replace just because of that. Obviously, it's got to be a better reason than that. You got to have significantly better growth potential if you're looking for growth, or the income has to be a lot better than what your current policy is giving you as well. So insurance companies don't like churning. They don't like advisors selling something and then reselling and then it's not a good practice and it's frowned upon, and for good reason. People do that to pad their bank accounts and get more commissions, and it's wrong. You just have to make sure when you do replacements, you have to make sure you get your much higher income, not just a little bit. It's got to be significantly higher. And then you got to make sure that you got a bonus that's making you whole. So there are some times where bonuses are really good. If you're looking for a bonus just for growth, don't get it. Okay, you're gonna stifle the rest of your growth after that because they're gonna lower your participation rates and cap rates so that they can get their bonus back. So it's great for people that lost a lot of money in the market and they want to have some of their money back or all of it. That's great. But you have to realize that you will be stifling future growth. But we're just talking about growth annuities. If you're looking for income, it doesn't matter. Hope that helps. If you're looking to replace your annuity, if you're thinking about better contracts out there, certain companies have a 10% bonus. This particular one was with American Equity. National Western also has bonuses. Athene has bonuses as well. So if you go to my website, johnstevenson.com, plug in your surrender value, and then see what the payouts are, and just compare it with what the payouts will be for your current annuity. And that'll tell you right there if it's worth it. If your payout with the new annuity is like 30% higher, then it's probably a good thing. But you also have to make sure that it's with a carrier that offers the 10% premium bonus. Anyways, happy to help you with that. If you are looking to purchase an annuity, book a call. There's a link below this video, and there's also a link on my website, johnstevenson.com. But yeah, I would invite you first just to check my calculators. Check the income rider calculator. That would be the best one. That's the only ones that give you bonuses, and that they're the only ones that give you the highest income as well. So anyways, check those out first, and then when you're ready to book a call, go ahead and do so. We'll get on a Zoom, and we'll talk about whatever you're looking for, and I'll answer your questions. And of course, I'd love to help you purchase an annuity if that's what you're looking for. So anyways, if not, that's fine too. I'm here to help either way. It's a lot more fun to talk about annuities when you're looking at this. It just is. There's a lot of boats out here too, which I'm surprised, because when it's choppy, it's not very fun to be on a boat when it's choppy. But there's a lot of people out here. There's even people out here in jet skis earlier. But it's got a little bit choppier lately, so things are, it's not as busy as it once was. So anyways, but the weather's perfect. It's a great place to visit for the summer, and really love it out here. And it's a great place to go hiking and just, explore and enjoy the water, and, it's a good place to come. So anyways, if you've got questions on anything, let me know. If you like the video, subscribe, share, like the video, comment below, and we'll see you next time. Hey, I really appreciate you watching the video today. If any of it makes sense to you, or if you found value, or if you even got a question about anything, I hope that you'll go to the comments section and ask it. There's no stupid question, and I'm looking forward to hearing from you.